Hi, everybody. Oh, we're getting close to the end. Welcome, Richard Stoker of CME. He's the head of retail at EMEA. This is pleasure to be here with this conference is quite varied in terms of different players in the industry, and I'm glad to have Richard here. So first, can you introduce yourself, introduce what CME is doing? Not many.
Sure, thank you very much, and good to be here. And just in case anyone's wondering, we've actually swapped chairs from what it shows in the background here. So if anyone's confused, I'm Richard Stoker from CME Group, but I'm sure we'll get past that. So yeah, great to be here. So CME Group, for anyone that doesn't know, is a 170-year-old financial institution originated in Chicago. It's an $80 billion company. You may well know us for some of the products that we offer. It started back in 1848 in terms of offering some of the agriculture products for hedging purposes back in Chicago, but we're probably more well known in this space for things like the S&P 500, NASDAQ, gold, crude, some of the FX markets where we are the primary source of liquidity.
Yeah, and many traders who take fundamentals into account probably know the CME FedWatch tool to see the probabilities of interest rates. But we're here to talk about other aspects of what CME does.
Well, hold that thought. Remind me to talk about the FedWatch tool later on in the conversation, because I have got a couple of snippets about that.
Oh, okay. So that'll keep you waiting for some great anecdotes later on. So this is a conference mostly for traders and brokers, and some of you actually use CME's tools without even knowing that. So, and perhaps you can tell us a bit more about.
Yeah, sure. So as I say, we're probably kind of known for a lot of the products. In the retail space, yes, the equities are hugely popular, as are the crude markets, especially at the moment what's going on in the kind of energy markets in the last couple of weeks. Gold, obviously, primary source of liquidity, but I mean, a lot of times the brokers that you're using will be sourcing their data from the kind of original source, which in more often than not cases is probably the CME Group.
Yeah, so that's a prime source. So also many people come here to the conference to talk about various industry trends. So what do you see recently, Richard?
So I mean, we're continuing to see a huge growth in the retail segment. So I mean, originally CME Group was institutionally focused. We've always had quite a big retail community in the US. Everybody knows where the Dow's trading. Everybody trades around their pension, their 401k, and they're very familiar with futures and options. In Asia, post 2017, after the Shanghai and Shenzhen indexes came back down, there was a huge demand for more kind of international type products, and we saw a huge influx from retail community into our exchange. And really, in the kind of EU and EMEA region, in the last 4 or 5 years, futures and options has really exploded as people do start kind of getting a bit more educated and demand for that underlying source of liquidity we just mentioned.
Yeah. So more education and more instruments as well. Does it mean more instruments? Yeah.
So yes, I mean to kind of to focus on this demand, we launched a product back in, I think it was either 2000. I'm looking to my kind of team here. Was it 2019 we launched S&P Micros? So I think it was 18. There's no prizes over there, but 2018, I trust my guy. So 2018, we launched E-mini Micro S&P, which was actually a tenth of the notional of the bigger brother. So 10th of the notional, 10th of the tick. So it's $1 versus $10 kind of minimum tick increments. So you need a lot less money in your account to trade it, less margin on deposit. So really kind of focused on the self-directed individual trader. And lo and behold, this was actually the most successful product launch of any exchange in all time globally. We had a little bit of a sweepstake for the first day volumes. Everybody was way out. It's like 500,000 contracts from day one, and it now trades more volume in the kind of APAC session than it does the kind of bigger brother. Oh, wow. But with the advent of that, we launched NASDAQ Micros, Russell 2000, the Dow. We've got them across crude, metals, FX. We're looking at all the other kind of products and kind of treasuries, as you kind of mentioned there. was never really a kind of retail-focused product. But over the last couple of years, with the kind of 16 rate hikes that we've seen from the Fed, which is the kind of the most amount of rate hikes we've seen since the 1980s, everybody's hearing around rates. Everyone's hearing about kind of treasuries on CNBC and Bloomberg and want to get involved. And we did launch a kind of a micro yield product to address that market.
Yeah, I mean, as someone analyzing the markets for users at FXStreet Premium, it's okay, this is what happened in the markets. Now let's see what the FedWatch tool of CME Group tells us what bonds say.
Yeah, so interestingly, I mean, in terms of tools and analytics, we do have a kind of side of our website which is around education, which is kind of directed towards the self-directed trader. And yeah, we do have a lot of tools and analytics. We've got whole teams of people thinking about what is the kind of needs of the trader to make the most informed decision pre-trade. So we do have a kind of FedWatch tool, which basically takes the kind of implied pricing from our 30-day Fed funds, which basically shows you the probability of a Fed cut or hike in the upcoming Fed meeting. And obviously, as you'd imagine, that's changed a lot across this year when we were going for probably two cuts at the beginning of the year, up to 6 by mid-year, and back to whatever it is now towards the tail end of 2024.
Yeah, it's been quite a roller coaster. And when I see sometimes the chances of the next move to be 50-50 for 25 cut, BPS cut, or 50, then I know there's going to be high volatility and there's going to be lots of action. And
so when you see it 50-50, that guarantees its volatility because nobody knows.
Yeah, opinions make a market, which means more volatility, more action. But traders are, I mean, something you mentioned, there's more maturity in recent years. Why?
Well, I think for some of the brokers out here, we did see, I think everybody probably knows, there was a huge surge of trading back in 2020-21 when we had lockdown. Everybody thought they were a trader. I had some of my friends that had no interest in trading before tell me they've set up kind of retail trading accounts. I think you've basically got two things. You've got some of the guys, I think you've seen this yourself, that probably got burnt initially, not knowing what they were doing. They've kind of like gone back, learnt a lot more about the kind of the craft and come back into the markets. But really, I think it's probably down to three things. One is, as I say, the kind of the growing education of the self-directed trader in terms of product knowledge, in terms of kind of accessing some of the tools that are available now, which used to be just the preserve of the kind of the hedge funds and asset managers. There's probably never been an easier time to get your hands on some of these kind of tools, analytics, white papers, all that kind of stuff. And they are kind of demanding from their brokers access to the primary source of liquidity. Now, there was a guy, I'm not sure if he's in the audience still, but there's a guy on a little while ago talking about gold and talking about how the futures prices generally move first. And that's true, and I think that's really kind of pushing people to demand from their brokers access to futures. The second thing is really around some of the things that global exchanges, such as the CME, but some of the other exchanges have done too, in terms of launching products that are more suitable for their end user. And the third thing is probably regulation. Regulation, whatever country that you're talking about, whether it's EU, UK, MENA region, Australia, everybody really wants the best outcome for the end user. And this isn't just about trading. This is in pensions, loans, mortgages, everything. They want the best outcome for the trader. And more often than not, the best outcome for the trader is probably access to the underlying price, not trading a spread around the underlying price.
Yeah, that makes sense to have a solid rock at the end of the process, which is prime sources. So what next question I have here? What contracts are global exchanges launching? Well, we talked about mini and micro futures. Are there additional contracts on the road?
So, as I say, we've got 21 micro products now. I think we've got 22 as of the end of this month, where we're launching micro Nikkei. And again, they're all the 10th of the notional, as we talked about. But as we kind of like try to address the retail community, And when I say the retail community, we only work with brokers, okay? Retail for us is growing our distribution network. We don't look to disintermediate the brokers by going direct. But as we look to kind of roll out some of these more retail-focused products, we're not just kind of like focusing on the product, but some of the product names too. So I'm not sure if anyone if I've got any kind of LinkedIn friends on here, but you'll be aware I had a new BFF a few weeks ago, which is our Bitcoin Friday futures that we launched. And that is kind of like the product code BFF. We're even giving bracelets to our broker partners saying my new BFF. Micro gold options, OMG. It's not just kind of the products that we're rolling out, but some of the kind of names too to kind of really kind of resonate with the end user. But in terms of your kind of question, yes, I mean, equities is always huge for us in terms of this segment. But this year we've seen a huge rise in people not just kind of focusing on one product, but trading across asset class. I think back in March this year, when we had the first gold move, a lot of people moved into metals, and for a lot of brokers, we saw that overtake equities. At the moment, I'd imagine, I haven't seen the sheets in the last couple of weeks, but I'm guessing the last 10 days or so, energy has had a kind of explosive growth. And the other thing I want to mention, which I don't think I've really addressed yet, is the options side of it. So
it's a hot topic as well, yeah?
Yeah, I mean, CME Group is probably the world's largest options exchange, and our options are options on futures. So we've kind of generally got options in all our liquid markets. And again, we've been kind of rolling out micro options products, but also shorter dated expiries. So you might hear some exchanges talking about these as kind of 0 DTEs, data expiries, or kind of daily options. We call them weeklies because you're going to trade up to a week in advance, but really we have them across most days for our most liquid products. And this is really kind of piquing the interest of that self-directed trader too.
Yeah, so there's what you're doing is, I mean, with these mini contracts, it's a way of democratizing reach to the S&P, to the Nasdaq, and with these additional, well, going into various metals is also answering demand from
yeah,
users.
I mean, on the metal side, we've got the metals across the board, but I mean, if you think about most people treat gold as either kind of a store of value, an inflation hedge.
You can't pass half an hour in this conference without
whatever you want to
gold.
call it. Copper. I mean, is this isn't trading advice, obviously, but I mean, is that a kind of proxy for Chinese growth? So people have moved away just kind of not just gold, but into copper, silver, platinum, palladium. But also, I'll tell you what else is really popular at the moment, some of the battery metals. With the kind of rise of EVs, with some kind of lithium, cobalt, all these kind of products, that's kind of a lot of this kind of retail community who love Elon Musk, love the Teslas, want to get involved in battery metals.
Yeah, I've heard that, well, you can stick with copper. There are just 4 times more copper in EVs than in regular cars. So I think, and of course, so many other metals going on over there. And you mentioned, people are moving into different assets, and you have to, and then circling back to something we mentioned, and something that is a big topic here as well, is education.
Yeah.
So if they move from one asset to another, there's a big role for education here as well.
I mean, I'm sure education is key for kind of your side too. But I mean, education, yes, education's keen, as I say, in the trader, everything that they need to make the most informed decision on the trade. Okay, that's the kind of the heart of it. And yeah, education is key in terms of product, contract spec, tick size, notional, margin at the clearer, all these kind of things. But I think education probably goes further. I think for this community that probably maybe not familiar with futures, or even the kind of the wider community, they need to educate themselves on leverage, margins, platforms, all that kind of stuff. I mean, leverage. I mean, we were talking before the panel today. I mean, if you buy a property as an investment, that's probably a leverage product.
Yeah.
You're putting 25% down, the bank's lending you the rest, you're getting the capital depreciation on the actual assets. That's a leverage product. Leverage is good in some ways. Futures are leveraged. Some things are probably over-leveraged. So, I mean, you need to just kind of go into a lot of these platforms with your eyes open. Is 888 times leverage because
To
it's
me,
a
it
lucky
sounds-
because it's a lucky number. Is that good leverage? If you're just being comfortable with what you're trading, and I think that's where kind of education is key.
Yeah, it makes sense. Yeah, my leverage on my apartment is 5 to 1, uh, so I think that's safe. But 8 to 1 would be already a lot, and 888 to 1 is too much. And in terms of education, is there also an aspect of the? I mean, people need to know the basic terms in order to be good traders, as you mentioned. And another topic here at the conference is psychology, and people want to trade fast. But at least what I've seen in recent years, in the past year or two, is that people have been already burned by this more gambling attitude, and now they want to do it right, and they have the demons fighting between wanting to get into trade and taking a trade which is more informed. Do you see differences between, as far as you know, from from brokers in different regions or different asset classes where there is more room for education or less room?
I mean, so typically, this region, Dubai, has been so goal focused, as you probably know. I've been coming here on business for 13 years. And the first time I came here, we were looking to obviously service the institutional crowds and kind of promote our products as kind of hedging tools across the spectrum. We've got 3 commodities, 3 financial products, and obviously crypto, if you count that as a separate asset class, as 7. In terms of the retail, yeah, and again, it's kind of education. If you're trading gold, are you trading gold because you like the volatility of that product? You like the kind of the daily ranges? You like the tick size? Because, that's what you should be focusing on. There's plenty of other asset classes with similar profiles to that. And just again, this isn't trading advice, but understanding the macroeconomics, what moves the markets. Speaking on a personal level, I was a trader for 22 years before I joined the CME group from back in the days. I know you can't believe this, my 5th decade in this business, starting in the late 80s. But
you look much younger than
no,
all that accumulated experience.
Yeah. What, is that vodka in the bottle or is that water? But seriously, for me, it's more kind of consistency. Consistency as a trader probably beats everything else. And knowing when not to trade.
Yeah, finding the right balance between, well, consistency and also being able to adapt to changes, which are always coming here. So you mentioned this region, the Middle East, Dubai. How do you see retail trading evolving here in the Middle East moving forward?
So, this region's very exciting for us. Not just Dubai, but some of the kind of neighbouring regions too, neighbouring countries and regions. As I say, we've always had a big market in the US, in Asia, we're quite dominant. Over here in Europe, we're kind of gaining kind of explosive traction. This region, I think, is probably 10 years behind where we see in EMEA, probably in terms of both the broker network, but also the kind of the underlying user. It's really getting people access to the exchange through kind of our broker network. And yeah, we're always looking for products that are kind of more relevant to the region. Over here, as I say, gold's always been a focus. It's gone into energy, equities. I'd like to get people more educated on the kind of treasury markets. You kind of talk about where retail could go in the future.
Yeah.
Wouldn't it be nice at some point, you mentioned kind of your mortgage, wouldn't it be nice if in the future, when your bank gives you a mortgage, you get a kind of like a little deck with it to say, okay, did you know that kind of you're on a fixed term? So in the UK, fixed terms of 2 and 5 years are probably the most popular. In the US, it's 30 years. But wouldn't it be nice if kind of your bank, when you get a mortgage loan, says, okay, right, this is a little deck. Do you know that while you're in a fixed term, you can actually hedge your interest rate risk with futures options or whatever it is? I think that's probably where we're going across the whole, certainly across Europe, but some of the other kind of countries we deal with. There's a real drive for financial literacy from both the governments and the regulators. And I think we can play a part in that to try and help that.
Yeah, and there's, the big liquidity provider can certainly push towards more education and going along with these bigger trends. I see. So yeah. So we're talking about governments, regulators, CME Group, which is prime source of liquidity, and then brokers. So how does CME work with brokers, which I'm sure we have here representatives in the audience?
So I mean, obviously, as we kind of talked about, we kind of retail for us is growing our distribution network, and we work with kind of key partners to obviously kind of facilitate our goods and services. But I mean, that's obviously with some of the brokers at a kind of more kind of mature stage of their kind of development. Not my team directly, but obviously within CME Group, we have teams that kind of work on the data side, connectivity side, infrastructure side. So I mean, for brokers that get to a certain size, are you at a size now where you can go, as I say, to the direct source of liquidity to create your own products? Obviously, we only work with the highly regulated firms out there, but I mean, are you at a stage now where you can talk to our data team around deriving the data directly from us to create the products? Then for your book, whether you're looking to hedge ETFs, whether you're looking to hedge individual stock equities, CFDs, whatever it is, how are you hedging that? Can you hedge directly into futures? Come and talk to us. And again, some of the bigger brokers out there that are kind of this kind of maturity stage, and they're getting demands from that kind of more experienced kind of underlying user asking for futures and options. Come and talk to us.
Yeah, I see. So it's a process of maturity that runs down from, I mean, through all the levels, from the big monsters in this market like CME Group, through the big brokers, through the smaller ones, until the traders.
It's account size as well, right? I mean, someone with $50 in their account probably isn't going to be trading futures and options. So it is kind of the more kind of inverted commas pro-tail side of the industry. But I mean, as I say, we have got micro products for most of our benchmarks. So that is kind of, as I say, working hand in hand with the brokers to make sure that the kind of the end user is aware of these. But yeah, it's where the brokers are in that kind of stage of the journey.
I see. Yeah, it's also a process of maturity going on in markets. And I have one more thing I wanted. I'm sure I missed something here. Yeah, another thing I see among, we talked about brokers, and it dovetails with many other things we talked about, is a tendency from acquiring traders to retaining them, to educating them.
Yeah.
Is that something, have any insights on the shift from acquisition to retention?
That's a very good question. And we see this actually a lot. I think those days we kind of talked about it already in 2020, when there was just, all you had to do was sponsor some kind of team, and you'd have a ready supply of people opening accounts, kind of blowing up, but then you obviously didn't really care because you had this kind of like ever kind of constant activity of account openings. Those days are probably gone.
It was a short period of time, wasn't it?
Exactly, it was. I mean, and don't forget, I mean, a lot of this was kind of funded by furlough checks, kind of state benefits, whatever it is, and that went straight into some people's kind of trading accounts. I mean, those days are probably gone.
So
okay,
once in a century pandemic, once in a century stimulus
well,
check.
let's hope we'd never see a kind of pandemic in our lifetime again. But yes, hopefully. But yeah, those days are gone. So what this has basically led to is, you're absolutely right, brokers looking for client retention. And that's probably what we kind of hear most from the people that we speak to. It's around kind of education. I mean, marketing for us, because obviously we are the exchange, is pretty much just education. We want to give customers, as I say, that kind of informed choice. But if your business model is basically just kind of marketing, kind of taking the other side of the trade, then you probably haven't got a business. For us, as I say, it's around customer retention, which kind of lends itself back into kind of the education. And as I say, if we're giving people access to the underlying source of liquidity, they've probably got a kind of better chance of success.
Yeah, because they're not into the market making well, they don't crash against this wall. Also at FXStreet Premium, we're seeing that retaining existing users or even getting them back after they leave us is less of an effort than finding new users, new traders out there. And perhaps this once in a lifetime pandemic, stimulus checks, getting new people, it opened the market. Sure, some people got burned, but enough of them now want to make a comeback. And
I think there probably has been a bit of a drive from a lot of brokers to focus on, in some kind of regions, larger account sizes. And I think probably that is a focus for a lot of brokers coming to the Middle East as well. From what we hear, some of the account sizes are kind of larger than probably where they're used to on the kind of domestic markets. But with that probably comes with people doing a bit more homework on what they trade, because if you've got $50 in your accounts, you're probably going to be a bit quicker to trade than if you're putting a bit of a kind of a larger sum down. You probably want to be doing a bit more homework, looking at kind of waiting for the opportunities, than if you're really just kind of if you're not too bothered about what you've got in an account. That's probably what we're seeing. And again, those clients, from what we hear from the brokers, tend to be stickier.
Yeah, $50 is the maximum I gave myself when I went to Las Vegas to a casino. This is the money
Smart
I'm
man.
earning. Yeah, that's it. So yeah, it makes sense. So it's also a process of maturity. People coming with more money, more of a purposeful trading.
And that's kind of lends itself into what we're seeing in options, because I mean, if options was an asset class, it would be our fastest growing asset class year in, year out for the probably last 4 or 5 years. And
Consistent
that's really
growth. Wow.
Yeah, exactly. I mean, I think we're at something like 44% this year in options, but that's really
Wow.
because people they've got a view. A lot of people are coming in to obviously kind of hedge their exposure or kind of look for kind of the price movements, and they want a kind of like a fixed downside risk. And obviously that lends itself into the options markets, whether it's just simple calls and puts or looking for kind of more volatility strategies. All of this is under one roof.
Oh, yeah, the trend of going multi in everywhere we're seeing. Okay, I see the clock ticking. We have 3 more minutes. Is there, for this audience here, is there one takeaway you want people to come out with from this conversation, a message to?
Well, it probably is. It's kind of the knowledge of the underlying source of liquidity. It's the growth of options, and I think that's probably a trend we're going to continue with. I don't see that slowing down anytime soon. It is the trend for, as I say, for kind of shorter durations on those options. It's a trend for some shorter duration, some of the futures contracts, like Bitcoin Friday futures, which is basically 2-week roll expiry.
Yeah, the world is moving faster, so people want.
The world is moving faster, yes, but also kind of in terms of Bitcoin Friday futures, because it's a shorter kind of expiry, it's kind of more. It's more of a kind of look-alike in terms of price to the kind of spot price they see on kind of the TV or on their kind of trading app or whatever it is. Right. But really, for brokers here today, it's those 3 things. It's their revision of product direct to source. It's looking to hedge their book back into futures directly. Oh. And it's looking to kind of partner with us if your customer base is at that kind of mature level, to look to potentially offer futures and options directly.
I see. So I think that for the smaller brokers, it could be an aspiration.
It's where they are in that journey, for sure.
Yeah, to get this, to work with the CME group, that would be okay. We have arrived. We have grown.
Well, it's about offering the customers choice, right? I mean, right. I think you talk about themes. What we're seeing across the board is brokers turn themselves into investor platforms now.
Right.
No matter how big they are, if they know someone is leaving their platform to go and trade an ETF here or future there or an options product there, why are you letting someone walk off your platform when you spent $1,000 cost per acquisition sponsoring 6 Premiership football teams or whatever it is? Yeah. So that's really what we're seeing, and turning itself into an investor platform probably lends itself nicely with what everybody wants to try and do in terms of financial literacy.
Yeah. So yeah, if you got that person and that already trading and now there's a new trend in markets, that's the way to retrain them, to give them more choice according to what trends are right now. Okay, we're running out of time. I hope you've enjoyed this conversation with Richard Stoker, who is not the moderator. He's the EMEA head of retail at CME Group, which more people should be aware of. I hope you enjoyed this conversation as much as I have. We still have a few hours in this conference, so you can come talk to us. We'll be around right here.
Thanks, Yohay. Been a pleasure. Thank you.
Okay, my pleasure.